Let's start with a truth that most traders will never admit to themselves. You don't actually want to trade. You think you do. You think you're here for the charts, the patterns, the thrill of beating the market. But if we are brutally honest, what most people really want is money fast. Instant gratification. A quick win that validates their self-image. That's why so many people flood into trading after watching one viral YouTube video or reading one flashy post on social media claiming someone turned 500 into 50,000 in a month. The excitement is intoxicating. The possibility of sudden wealth is seductive. But the harsh reality is that the market doesn't care about your dreams, your hopes, or your excuses. The market doesn't reward desire, it rewards discipline, patience, and commitment, qualities that most so-called traders don't even possess. Look around and ask yourself, how many traders are actually willing to do the work? To sit quietly, study charts, analyze patterns, read balance sheets, and test strategies over months or years? Not many. Most people want signals. They want someone else to hand them the answers. They copy trades, join groups, pay for alerts, and yet they never understand why the trade works or why it fails. They avoid reading, they avoid learning, they avoid real commitment. And when the market inevitably goes against them, which it will, they panic. They scream manipulation. They curse the system. They blame the brokers. They cry foul over imaginary conspiracies while refusing to look in the mirror and accept that the only real problem is themselves. Here's the truth: no one wants to hear losing 3 trades in a row doesn't make you unlucky. It makes you a beginner. It makes you human. Yet so many quit after these small failures, expecting that just because they lost once, the market owes them a jackpot. They expect to become millionaires while spending hours scrolling TikTok instead of studying. They expect mastery without sacrifice. And the moment reality hits, they vanish, moving on to the next get-rich-quick scheme or surefire system that promises to fix their lack of discipline. Ask yourself some questions. Do you journal every trade? Not just the winning ones, the losing ones too, the ones you got greedy on, the ones you let fear dominate. Do you know exactly why you entered, why you exited, what worked, what didn't? Most traders don't. They think logging a trade is optional. They think memory is enough. They think intuition is a skill. But memory fades. Emotions cloud judgment. Patterns repeat. Without meticulous tracking, you will never see your own flaws, and you will never improve. Do you follow strict risk management? Can you calculate your risk before every trade and stick to it no matter what? Or do you double down when you feel lucky, or revenge trade after a loss, letting emotions dictate your capital allocation? Most traders can't. They tell themselves rules exist to protect them, but rules are just obstacles to excitement. Rules are boring. And so they break them, justify it, and repeat the cycle again and again, watching their accounts slowly erode, thinking, I'm just waiting for my big break. Can you sit out a whole week without trading? Without scrolling charts? Without opening your trading platform? Without letting FOMO gnaw at you? Here's where the truth hits the hardest: most can't. Sitting on the sidelines is excruciating for the addicted mind. Every minor market fluctuation feels like a missed opportunity, a personal attack. The noise, the tickers, the alerts, they scream at you to act, to trade, to feel something. Yet the greatest skill in trading is often doing nothing. Waiting. Observing. Patience is the silent weapon that most overlook. But humans are wired for action, for stimulation, for instant feedback. And trading exposes this weakness mercilessly. Most fail not because the system is bad, but because their own impulses are stronger than their discipline. Let's talk about the obsession with excitement. Trading is not a thrill ride, though many treat it as such. The dopamine rush of a winning trade, the adrenaline spike of a sudden breakout, these are addictive. People chase them, believing that excitement equals skill. They mistake volatility for opportunity. They think that being busy, constantly entering and exiting trades, proves competence. But real trading mastery is quiet. It's repetitive. It's slow. It's methodical. It's unglamorous. Excitement is fleeting. Consistency is eternal. Yet most people will never experience this because they are addicted to the rush, not the process. And while they are chasing the next dopamine hit, they are also evading responsibility. It's easier to claim the market is rigged, that some manipulator is pulling strings behind the scenes, than to acknowledge personal mistakes. Blaming external factors feels righteous, heroic even. Accepting responsibility, on the other hand, is uncomfortable, humiliating, and rare. It forces self-reflection, self-discipline, and accountability, the very things most people avoid at all costs. The irony is brutal. The market will happily take every dollar from those who refuse to own their choices, yet it will reward those who do. Most people quit too soon. They expect millionaire results after 3 months, after 3 trades, after 3 lucky breaks. They are unprepared for the grind, for the rejection, for the boredom, for the self-confrontation. They ignore the learning curve. They ignore the months of preparation. They ignore the sacrifices required to turn trading from gambling into a profession. And so they fail not because trading is unfair, not because the market is impossible, but because commitment is scarce, discipline is rarer, and self-honesty is almost extinct. The brutal reality is this: the problem isn't the market. The problem isn't luck. The problem isn't even the strategy. The problem is commitment. It's the willingness to face yourself, to track every mistake, to follow rules even when it hurts, to sit quietly when nothing is happening, to endure loss without rage, to endure patience without reward. Most people cannot do this. They think they can, but when the first storm hits, they crumble. When the first losing streak arrives, they disappear. When the excitement fades, they vanish. This is not to scare you. This is to awaken you, to make you see the mirror the market forces hold up. If you want to survive, if you want to thrive, if you want to turn trading into more than a fleeting hobby, you must confront this reality. You must stop chasing excitement. You must embrace consistency. You must accept responsibility. You must be willing to sit alone with your thoughts, your mistakes, your fears, and persist when no one is watching, when no one is cheering, when nothing is happening at all. Every trader who has ever made it through the early years, every professional who has survived the carnage, has done exactly this. They journal. They analyze, they plan, they follow rules, they sit, they wait, they endure, they accept losses as lessons, they embrace repetition, they value patience above thrill, and they understand, above all else, that trading is not a path to instant gratification, but a test of commitment, a mirror of character that spares no one, forgives no one, and ultimately rewards only those willing to look beyond the illusion. Let's be brutally honest, most people step into trading with a fantasy in their heads. A fantasy fed by flashy videos, Instagram posts, YouTube highlights, and the endless scroll of social media traders flaunting their lifestyles. Fast cars, designer clothes, high-end laptops, tropical vacations paid for by trades made in pajamas at 2 a.m. This is what they think trading is. This is the image drilled into their brains over and over again. Trading equals freedom, excitement, wealth, and instant gratification. They imagine themselves living that life, hitting a signal, and watching their account explode. They picture making hundreds of thousands in weeks, living unconstrained, proving everyone wrong while their friends are stuck in boring 9 to fuss. This is the fantasy. This is the story that keeps them glued to their screens and makes them think trading is a shortcut to the life they want. And then reality hits. Harsh, cold, unrelenting reality. Trading is nothing like that fantasy. Trading is boring. Really boring. Most people underestimate just how repetitive and monotonous trading actually is. You spend hours staring at charts, analyzing candlestick patterns, watching indicators, and waiting for setups that may never come. You track news, check economic calendars, refine strategies, and repeat this process day after day. There's no drama, no excitement, no fast cars in sight. The thrill isn't in making money quickly, it's in surviving, in making disciplined decisions over and over again, in controlling your emotions, and in sticking to a plan, even when the market teases you with opportunities that could make a huge profit but don't fit your rules. The market doesn't reward greed, impatience, or fantasy. It rewards discipline, patience, and consistency. Social media has done a massive disservice by selling the illusion that indicators are magical, that one strategy is a golden ticket, that more trades equal more money. Many newcomers believe if they find the right indicator, the perfect moving average, or the secret system, they will instantly be profitable. They chase the newest signal, the newest bot, the newest guru, expecting it to solve all their problems. The reality is that no single strategy guarantees profits. Indicators don't make money. Charts don't make money. Traders make money, or lose it, through discipline, risk management, and controlled execution. Every professional will tell you that success in trading has less to do with what you use and more to do with how you use it, and how consistently you follow your rules. Then there's the obsession with action, the belief that more trades equal more money. Social media traders flaunt their huge number of trades, their flashy entries and exits, their constant activity, making you feel like you need to be doing something every second. The reality is almost the opposite. The more selective you are, the better. Waiting is not weakness, waiting is power. Professionals know that the best trades are the ones you take after careful planning, not the ones you force just to feel busy. Most amateurs confuse action with progress. They sit glued to screens, entering low-probability trades, over-leveraging, chasing FOMO, and calling it hustle. Meanwhile, professionals sit quietly, evaluating setups, calculating probabilities, and waiting patiently for the right conditions. The contrast is stark, and the difference between fantasy and reality is what separates losers from winners. So what does reality demand? It demands repetition. Repetition of analysis, of strategy, of journaling, and of mental control. It demands risk control. Professionals know exactly how much they are willing to lose on each trade, and they stick to it. Emotional control is non-negotiable. Losing trades happen. Winning trades happen. You can't let greed, fear, or excitement dictate your decisions. The market is neutral. It doesn't reward hope or punish despair. It just is. You respond or you get crushed. Authority comes not from flashy gains or bragging posts, but from understanding the mechanics of survival. Real professionals focus on risk per trade, not profits per trade. They calculate probabilities, knowing that no trade is guaranteed, but that over time, consistent execution builds an edge. Discipline in execution is everything. They know that deviating from their rules, no matter how confident they feel, is the fastest way to destroy an account. Capital preservation becomes the priority, because without capital, there is no game. Every decision is weighed not for immediate gratification but for long-term survival and compounding. Amateurs chase the fantasy. They focus on profits. Professionals chase the process. This distinction is subtle but critical. A new trader might boast about winning $100,000 on a risky trade, ignoring that they risked $5,000 to do it. They see the numbers and think it's a win. Professionals, on the other hand, look at the risk-reward ratio, the probability of success, the quality of execution, and whether the trade fits their plan. They celebrate properly managed trades, disciplined exits, and consistency over time, not the occasional lucky win. Let's revisit the fantasy versus reality contrast. The fantasy is flashy, loud, and instant. The reality is quiet, disciplined, and slow. The fantasy promises freedom but often delivers chaos. The reality provides control but demands patience. The fantasy is addictive. The reality is sustainable. The fantasy is emotionally charged. The reality is emotionally managed. Social media glorifies the fantasy, showing the highlight reels but never the hours of analysis, the losing streaks, the boredom, the disciplined journaling, and the painstaking adherence to risk management that defines the professional path. This creates a dangerous illusion for newcomers who think success is flashy, immediate, and effortless, when in truth, it is methodical, incremental, and deliberate. To survive, you must reject the illusion. You must embrace the reality. You must understand that every indicator, every strategy, every signal is meaningless without the process behind it. You must measure success by the quality of your decisions, not by the size of your profits. You must value patience over excitement, discipline over impulse, and preservation over greed. You must internalize that trading is a test of character, not just skill. Every winning streak can be destroyed by poor risk management, and every losing streak can be overcome by unwavering adherence to process. The fantasy will tempt you, social media will deceive you, and the market will challenge you. Your job is to recognize the illusion, embrace the grind, and master yourself before you attempt to master the charts. The truth is simple, but uncomfortable. Trading is not glamorous. It's repetitive. It's emotionally taxing. It's sometimes boring to the point of frustration. It's testing your patience, your discipline, and your ability to stay calm while opportunities are scarce and the market seems indifferent. The fantasy will promise excitement, wealth, and freedom without effort. Reality will demand diligence, self-control, and persistence without guarantee of immediate reward. Yet it is the reality that will separate the amateurs from the professionals, the dreamers from the survivors, the highlight chasers from the true traders who build something lasting. The biggest obstacle in trading is not the charts, not the indicators, not the strategies you spend hours memorizing. It's you. Your mind, your emotions, your impulses. Most traders never admit this to themselves because it's uncomfortable, painful, and ego-crushing. They blame the market, the broker, the system, even the news, but rarely do they confront the harsh truth. Trading is a mirror that exposes your weaknesses like nothing else, and most people aren't ready to look. Fear of missing out, or FOMO, is the silent killer. You see a stock, a currency pair, or a crypto token making a move. The price spikes. The crowd cheers, either in your head or online. You feel the pull, the urge, the anxiety. If I don't get in now, I'll miss it. That fear overrides reason. Logic flies out the window. You enter impulsively, ignoring your plan, your risk management, your rules, your own sanity. The market doesn't care about your fear. It doesn't pause because you felt left out. And just as quickly as the price soared, it reverses, leaving you trapped, frustrated, and emotionally raw. FOMO is everywhere because human psychology is predictable, and the market exploits it mercilessly. Then comes overtrading after losses. A trader loses a trade, maybe one that perfectly fit their system. Maybe it was just bad luck. Instead of accepting the loss, analyzing it, and moving on, the mind screams, I need it back. I need to prove I'm right. That's when people start stacking trades, entering setups that aren't optimal, breaking every rule they promised themselves they would follow. They overtrade, often at higher risk, fueled by adrenaline and frustration. Every loss compounds, not just financially but emotionally, creating a vicious cycle that's impossible to break until the trader either steps back or blows the account entirely. Lot sizes increase emotionally. A beginner might start trading 100 per position. After a string of losses, the mind convinces them they need a bigger win to catch up. Suddenly 100 becomes 500 or 1,000 to 12,000. This is not strategy. This is ego. This is desperation dressed up as action. This is the exact behavior that destroys accounts. The market doesn't care about your emotional reasoning. Risk doesn't scale with courage, only with numbers. And when that larger trade fails, as it will if it's not part of a disciplined plan, the financial and emotional damage is exponential. Revenge trading is the natural extension of all of this. You lose, and you don't accept it. You don't analyze it. You don't respect the stop loss. Instead, you chase the market, trying to win back what you lost, hoping to make up in one trade what took weeks or months to erode. This is the psychology most traders refuse to face. You are not trading the market. You are trading your anger, your ego, your frustration. And the market doesn't care. It takes what it can, and it leaves you humbled. Ignoring stop losses is the hallmark of undisciplined traders. They enter positions, set a mental stop, and pray. They hope the market will turn in their favor. They convince themselves that their system works, that the pattern should hold, that somehow they are special. The market doesn't work that way. Losses are part of trading. Discipline is the only shield against them. Ignoring a stop loss is ignoring reality, and trading is nothing if not the cold acceptance of reality over desire. This is why trading is 80% psychology and only 20% strategy. You can have the best system in the world, backtested to perfection, with indicators that light up like a Christmas tree. You can have risk calculations, rules, and plans. But if your mind is weak, all of that becomes irrelevant. A single moment of fear, greed, impatience, or arrogance can undo weeks, months, or years of preparation. The question every trader must ask themselves is simple and brutal. If your strategy works, why are you still losing? The answer is almost always because you don't follow it. You ignore it. You let emotions decide instead of logic, process, and discipline. Discipline beats strategy every single time. You can have the most intelligent system, but if you fail to follow it, it will fail you. Consistency beats intelligence. A novice who follows rules, journals every trade, and respects risk will outperform the genius who bends rules in search of excitement. Patience beats prediction. You can't predict every move, every reversal, every spike. You can, however, wait for the right conditions, enter with precision, and protect your capital. These are not glamorous truths, but they are the foundation of survival in trading. Most traders avoid facing their psychology because it's uncomfortable. It requires introspection, honesty, and humility. It forces you to admit that losing isn't always caused by the market or bad luck. It's caused by your own decisions. That moment when you let FOMO dictate a trade, when you chase a loss, when you increase your lot size emotionally, when you ignore a stop loss, that's the moment you fail yourself. And until you confront these patterns, No strategy will save you, no indicator will make you rich, and no amount of knowledge will protect you from the consequences of your mind's weaknesses. The truth is unflinching. Trading is as much about mastering yourself as it is about mastering charts. Every winning trade is a victory of discipline over desire, patience over impulse, consistency over ego. Every losing trade is a lesson, a mirror reflecting where your psychology failed, where your commitment faltered, where your control slipped. Professionals spend as much time on their mental preparation, journaling, self-reflection, and emotional regulation as they do on systems and indicators. The amateurs, they chase profit, signals, excitement, and the fantasy of easy wealth, never realizing that the real battleground is internal. Discipline is the shield. Consistency is the weapon. Patience is the armor. Without them, no system survives. Without them, no strategy endures. Without them, you will continue to lose in ways that feel unfair, frustrating, and confusing. The market doesn't play favorites, and it doesn't tolerate weakness. Your mind, your emotions, your ability to obey rules, respect risk, and control impulses, this is what decides whether you survive or perish in trading. If you want to survive and thrive in trading, you need to forget everything you've seen on social media about flashy profits, adrenaline-filled trades, and instant wealth. Serious traders operate in a completely different world, one where discipline, preparation, and a methodical approach replace excitement, impulse, and fantasy. The first thing to understand is that professionalism in trading is a blueprint, not a feeling. It's a system, not a hope. It's built on meticulous planning, measured risk, and an unwavering focus on survival before profit. Serious traders begin with written trading plans. Every strategy, every rule, every condition for entry and exit is documented in black and white. Nothing is left to chance, nothing is dictated by emotion. These plans are not suggestions, they are contracts with themselves. Every trade is judged against the plan, not against the temptation of a market move, a hot tip, or the fear of missing out. Writing down the plan forces clarity, it forces accountability, it forces discipline. Without a written plan, a trader drifts, reacting to every ping, alert, or headline, and trading becomes gambling disguised as skill. Risk management is the cornerstone of professionalism. Serious traders rarely risk more than 1–2% of their capital on a single trade. They understand that survival is more important than profit, because without capital, there is no opportunity to profit tomorrow. They don't gamble with large positions in search of instant gains. They calculate risk before entering a trade, set precise stop losses, and adhere to them no matter what. This mindset creates longevity in the market. While amateurs chase big wins and occasionally score, they are wiped out by the first losing streak. Professionals, by contrast, accept losses calmly because each loss is just one small piece of a larger plan, an expected outcome in a probabilistic system designed to edge over hundreds of trades. Tracking performance is another hallmark of the serious trader. Every month, every quarter, they analyze their results. They study which trades were executed correctly, which deviated from the plan, and where mistakes were made. They measure their edge, not in individual wins or losses, but over a large sample, 100 trades, 500 trades, even 1,000 trades. This statistical perspective keeps emotions in check and ensures that decisions are guided by data, not by hope, frustration, or greed. Amateurs obsess over the outcome of a single trade. Professionals obsess over the process across many trades. Serious traders trade less, but better. They understand that not every setup is worth entering. They wait patiently for high probability conditions, ignoring the noise, ignoring the minor opportunities that might tempt an amateur into action. Fewer trades with higher quality execution are far more valuable than dozens of impulsive trades. This selectivity comes from skill, experience, and the confidence to sit on the sidelines without feeling inadequate. The market does not require constant action. It requires precision, preparation, and patience. They treat trading like a business, not a hobby or a thrill. Every aspect of trading is approached with professionalism, capital allocation, record keeping, research, ongoing education, and continuous improvement. Just as a successful business owner does not rely on luck for revenue, a professional trader does not rely on luck for profit. They focus on creating repeatable processes that can generate consistent results over time. Trading is a craft, a discipline, a business where preparation and execution dictate outcomes far more than hope or speculation. One of the key shifts that separates serious traders from amateurs is the focus on survival first. Profit is secondary. The professional knows that capital preservation is essential. Every decision is made with the understanding that losses will happen, and that protecting the account is more important than chasing immediate gains. This survival-first mindset prevents the emotional decisions that destroy accounts, over-leveraging, chasing losses, revenge trades, or impulsive entries driven by excitement rather than analysis. Professionals also understand the importance of building skill over years, not weeks. They invest in themselves, in their knowledge, in refining their systems, in mastering market mechanics, and in cultivating emotional control. They understand that the market is a teacher, not a shortcut. Every loss, every drawdown, every challenge is a lesson in patience, discipline, and execution. While amateurs expect instant mastery, professionals embrace the slow grind, knowing that incremental improvements compound over time into sustained profitability. Execution discipline is the defining trait of a serious trader. They do not trade to feel something. They do not enter because the chart looks exciting or because a signal flashes green. They trade to execute a system, following every rule to the letter. They measure entries, stops, and exits precisely. Deviations from the plan are not tolerated because they introduce unnecessary risk. The system is tested, reliable, and repeatable. The trader's role is not to predict the market, it is to implement the system consistently, allowing probability to work in their favor over many trades. All of these traits, planning, risk management, patience, record keeping, selective trading, and execution discipline, combine to form a professional mindset. The amateur focuses on profits. The professional focuses on process. The amateur reacts to the market. The professional responds according to plan. The amateur is emotional. The professional is calculated. The amateur chases excitement. The professional cultivates consistency. This difference is not superficial. It is the reason most traders fail while a small minority thrive. The reality is uncomfortable. Most people want to believe that trading can be learned in a few months, that they can master a system, get lucky, and live the lifestyle of the fantasy they see online. The truth is that the path of the serious trader is slow, methodical, and sometimes tedious. It demands focus, sacrifice, patience, and unwavering discipline. But those who follow it reap the rewards that are invisible to the amateur's: steady growth, longevity, control over risk, and the ability to profit in all market conditions. Measuring edge over 100 trades is crucial. Professionals don't judge themselves by 1 or 2 winning trades or a lucky streak. They look at the probability of success over a statistically significant sample, knowing that short-term fluctuations are meaningless. This approach removes ego and emotion from trading, replacing them with logic and disciplined execution. They learn to accept losses as part of the system and victories as validation of their discipline, not their genius. Survival, first thinking, process-oriented execution, patient selection of trades, and consistent adherence to a system define the blueprint of professionalism in trading. These are not optional habits, they are non-negotiable requirements. Without them, no system, no strategy, no indicator can protect a trader from the psychological and financial risks of the market. Professionals understand this deeply. They act accordingly. They build skills over years. They implement rules without compromise. They measure performance rigorously. They focus on execution, not emotion. At some point, every trader reaches a crossroads, a moment when they are forced to confront the truth about why they are here, what they are doing, and what they really want. This is not a moment for excuses, daydreams, or half-hearted attempts. This is the moment when you decide whether trading will be a fleeting hobby or a serious profession. And the brutal reality is this: most people never make this decision consciously. They drift, consuming content, chasing signals, reacting to charts, and hoping that somehow, magically, consistent profits will appear. They avoid responsibility. They avoid discipline. They avoid commitment. And the market doesn't care. It doesn't reward dreams. It doesn't reward hope. It rewards results. And results are only possible when you confront the question head-on: are you here to build skill, or are you here to chase entertainment? Ask yourself these questions with total honesty. Are you a content consumer or a skill builder? Do you spend hours scrolling social media, watching videos, reading posts, and consuming other people's ideas without implementing them in a structured way? Or are you spending that same time practicing, analyzing, journaling, and building your own system. Content consumption feels productive because it keeps your mind busy, but it creates nothing tangible in your trading account. Skill building is uncomfortable because it forces reflection, analysis, and action. It forces accountability for your results. Only one of these paths leads to mastery. Only one of these paths prepares you to survive and thrive in the market. Are you chasing signals or building systems? The fantasy of instant profits is seductive. You see someone post a winning trade or a surefire signal online, and you feel compelled to act. You chase it, enter hastily, and hope for the same results. This is how amateurs operate. They think success comes from luck, imitation, or timing the right tip. Professionals understand that real trading is never about signals. It's about systems. It's about rules, probabilities, execution discipline, and measured risk. Systems can be replicated, backtested, and refined. Signals cannot. Chasing signals is entertainment. Building systems is professionalism. You must choose which side you are on, because one leads to consistent growth, and the other leads to repeated failure. Are you reacting to candles or following a plan? Every market move, every spike, every reversal creates an emotional reaction. Fear, greed, and hope push traders to act impulsively, chasing the illusion of control. Most people react, they enter, exit, adjust, and overtrade because they feel compelled to do something. Professionals follow a plan. Every entry, every exit, every risk calculation is predetermined according to a tested and disciplined system. Following a plan removes emotion, removes ego, and removes the chaos that destroys amateurs. Reacting to candles feels alive. Following a plan feels disciplined. The market doesn't reward excitement. It rewards precision. You cannot treat trading like entertainment and expect professional results. This is a hard truth, but it is unavoidable. Games, videos, and social media may give you a dopamine rush, but the market does not respond to emotions. It responds to professional behavior. Measured, disciplined, consistent behavior. You can wish for wealth, you can dream of freedom, but unless your actions align with professional standards, your results will mirror your fantasy, fleeting, inconsistent, and ultimately disappointing. There is no shortcut. There is no luck that compensates for lack of discipline. There is no indicator, signal, or strategy that replaces the mastery of self. The market doesn't reward desire. It doesn't care about how badly you want to be rich, how much you watch videos, or how many tips you follow. The market rewards discipline. It rewards those who control their impulses, follow their rules, respect risk, and stay patient when the charts seem boring. It rewards those who plan meticulously, execute consistently, and learn relentlessly. The amateurs wait for inspiration, the professionals enforce it through habit, routine, and unwavering standards. Desire alone will leave you broke. Discipline will allow you to survive, grow, and eventually profit. If you are serious, you must change your behavior. No more chasing signals. No more impulsive trades. No more letting emotions dictate risk. No more treating social media content as a substitute for skill. You must journal every trade. You must follow strict risk management. You must wait for setups that fit your system. You must treat trading as a business, not a game. You must accept losses calmly and measure performance over months, not hours. You must commit to building skill, not consuming content. The choice is yours, but the responsibility is non-negotiable. If you are not serious, then accept the consequences. Every impulsive trade, every rule broken, every emotional reaction chips away at your capital. The market will not forgive mistakes, and it will not reward fantasy. You may get lucky occasionally, but luck is temporary, inconsistent, and unreliable. If you are unwilling to adopt discipline, to build systems, to follow rules, to prioritize survival over excitement, then you are choosing a path of repeated failure. It's not punishment, it's natural consequence. The market simply reflects the reality of your actions. This is the final decision: hobby or profession, entertainment or skill, impulse or discipline, fantasy or reality. The line is clear, and it cannot be crossed halfway. There is no middle ground. The market does not negotiate with indecision. It does not reward hope. It does not give prizes to those who try a little. You must choose. You must commit. You must accept the responsibility for your results and the consequences of your choices. Discipline is hard. Patience is uncomfortable. Consistency is unglamorous, but they are the only paths to professional, level results. The market is neutral. It doesn't care about dreams or desires. It only responds to behavior. The results you get are a reflection of your discipline, your preparation, your patience, and your execution. The fantasy traders will continue to chase excitement and fail. The amateurs will continue to consume content and lose. The professionals, the disciplined, patient, consistent, and committed, will survive, grow, and profit over time. The choice is yours. The decision is yours. And the consequences are yours.